May 22nd, the market update desk with Scott Riley, powered by Mortgage One. We've got another fairly good day starting out today, which is great news that we can keep saying that. Now, stocks and bonds were both a little bit lower to start the day. Bonds were pressured from news out of the UK, where it was reported that inflation was in April slightly higher than expected. Additionally, um, selling in Japanese debt drove Japan's 10-year yield close to the 1% level. Now, that's a level that hasn't been seen in close to 11 years. Now, while this did start out the day like that, we have clawed that back and are doing a little bit better in bonds and mortgage-backed securities right now. Later this afternoon, we do get some important activity that's going to happen. There's a 20-year bond auction for $16 billion. The activity from institutional and foreign demand is going to drive a lot of what the reaction is in the market the second half of the day. The biggest potential market mover also comes at 2 o'clock with the release of the Fed minutes from the May 1st meeting. Now, we know a lot of what was talked about. Chair Powell came out more dovish than expected. There was growing concern potentially on the jobs front. But the biggest thing that's going to be interesting to see is if we get answers to why the Fed reduced the Treasury runoff number to 25 billion instead of what the market was expecting at 30 billion. Existing home sales fell 1.9% in April to an annualized pace of 4.14 million units. Now, that's slightly worse than the market had projected. Now, there was also a slight revision higher to March's numbers. So when you factor in the revision, we really fell closer to about 1%. Now we are down year over year about 1.9% in existing home sales. Inventory, this is a pleasant piece of data here, increased 9% month over month to 1.21 million units. Inventory is now up 16%, believe it or not, 16% from the same time last year. There is currently a 3.5 month supply of homes, which is tight, but it's still better than what we were at last month, of 3.2 months of inventory. Keep in mind, a balanced market or normal market is generally considered about 4.6 months of inventory. Now, keep in mind, all this data is national. We all know in West Michigan, it's definitely a tighter market. The most recent data from GRAR showed Kent County was just a tick under 1 month of inventory, but we are starting to see a trickle of more inventory come in. Even a little bit does make a big, significant difference. So with this trend line going, slightly better inventory numbers, that looks to help buyers between now and the end of the year. The median income price. Now, I'm surprised Diana Oleck isn't crying about this because she loves to squawk about the median price going down. Actually rose to 407,600. It's up 3.7% from last month, and it's up 5.7% from last year. So year over year, up 5.7% for median income. Diana Oleck isn't talking about this because it doesn't fit her narrative. Homes remained on the market for 26 days on average. That's down from 33 days in March. In West Michigan, obviously, that number is less because we are a more tight market. First-time home buyers accounted for 33% of the sales. That's up from 32% last month. So first-time buyers are coming into the market more and more and more. Cash buyers accounted for 28% of the sales, which was a flat amount from the previous month's report. Investors made up 16% of all sales. That's up 1 tick from the previous month's report. Interestingly, 27% of the homes that are out there nationally sold for above list price. It's actually down 2% from the March report, but it's still up 20% from the February report. In West Michigan, we all know the bid over ask. The percentages are much higher than that, but this is a national report. Mortgage applications, a little bit of a surprise continuing here. Purchases decreased by 1%. Refinances rose 7% week over week and are now up 21% year over year. In fact, refinances made up 34% of all applications last month. What's the reason for that? People are understanding that the cost of money for all of their other debt is significantly more than even today's mortgage rates. So when you look at the weighted average of your debts, you're going to save considerable money refinancing from your current rate to today's rates, paying off that other debt, which is sometimes 18 to 29%. So reach out to me, phone, text, message on here, and I can run the numbers to see how you could benefit from a refinance. Bonds were once again rejected yesterday from the 100-day moving average ceiling and are now battling with support at a very important Fibonacci level of 100.427. If bonds can break lower than this tight range, there is some support for about a 25 basis point run there to the 50-day moving average. The 10-year bond continues to test the 50-day moving average, which is keeping a lid on yields, unfortunately. Yields are getting squeezed between our 50-day level of support at 4.418 and the Fibonacci level. If we can break below that, we might have a clear path to the 200-day average of 4.336, which would give us better rates. Hope this information helps you out. Do us a favor, like, share, comment on this. Give us a call. We'll help you get pre-approved. 616-293-2189. Take care.